All right, so welcome everyone to join the webinar tonight. I think we are going to wait for few minutes, wait for more people to join us. And while we are waiting for others, if you guys have any questions, you can also type in the chat box. I will try to answer all of your questions. And I understanding that recently we do have several huge market movement, including the trends for the oil as well as the gold. If you guys are interested for that kind of like specifically crude oil analysis, gold analysis, you can also type in the chat box. While we are waiting for others, we can maybe also doing some of the analysis for you guys. So once again, thank you so much for joining the PU webinar tonight. And today we are going to discuss things about the technical analysis. So we hope after the webinar today, you guys are able to implement a good trading strategy with a useful some of the technical indicator. So stay tuned on it. Thank you. All right, so I think we are going to start our session right now. And before we start, just a quick risk disclaimer for you guys. This webinar is for informational and educational purpose only. Nothing discussed today should be considered financial advice, investment recommendations, or an offer to trade any financial instruments. Trading CFD and others leverage products carries a high level of risk and may not be suitable for all investors. Due to the nature of leverage, losses can exceed initial deposit, so it's important to fully understand the risk involved before engaging in trading. While we will discuss market analysis and trading strategy, these are purely for educational purpose and do not guarantee success. By participating in this webinar, you acknowledge that PewPride and I are not responsible for any trading decision you make or any losses incurred as a result. All right, so welcome again to join the webinar tonight. And today we are going to discuss about the technical analysis. The first thing that we are going to cover to let you guys understand why should we understand about the technical analysis. It's not just a pure charting, it's an art of trading that most of the traders should be understand on it. Because some of the asset classes such as gold, crude oil are quite different compared to the equity market like the stock markets. So as a result, we can be noticed that we can able to calculate the intrinsic value of the company. We understand what's price that we should be paid for some asset classes. Like for example, we can try to have valuations target on some of the Tesla stock and etc. But some of the commodities products as well as forex movement are very, very difficult for us to find the intrinsic value. That's why a lot of traders will be fully utilize the technical analysis to do the trades. And then we will let you understand why it's so important to use the technical analysis and cover some of technical analysis too, like a support resistance level and the indicator. And then we will also let you understand what is the most important candlestick pattern at the moment. And then we will try to do a real life analysis over there. And then afterwards, we will let you have a brief understanding about the price pattern. Okay, so now what is technical analysis? So this is the most important component for the trading for all of the trader, because a lot of trader might be using the technical analysis to predict by using the historical price in order to predict a future prices. So I give you an example of the real charts movement. So let's see if we are going to cover asset classes such as the gold. If I ask everyone what is the gold prices, everyone might have a different answer. So if I ask you guys, what do you think about the gold price right now? Maybe some of you guys might think, oh, currently you think gold price should be worth around $1,000. Some of you guys might think $2,000 per troy ounce. But there is very, very difficult for us to go and calculate the intrinsic value about what is the gold price compared to the company. Because if we are going to value at a company, we just trying to understand how much the company is going to earn, and then we try to forecast what is the company earning in the next 5 years, 10 years about that. But then we can try to convert into the intrinsic value and understand how much the company is going to worth on it. But as compared to the asset classes such as gold, it's very, very difficult for us to generate the intrinsic value of the gold. That's why most of the gold movement, the gold prices, is purely depends on the psychological market expectations. So by using the technical analysis, we will be able to understand what is the global investor think about the gold price. What price do they think the gold currently is so expensive, and which price they think the gold price should be quite cheap. So if you are going to according to the charts, we can be noticing that the overall trend for the gold is actually continue going up. Everyone think the gold price should be more expensive. But until a certain moment, you can see that the gold is actually suffering some of the restrictions. So after they testing around the record high, the gold price, you can be noticed it struggle to continue break above again. So from this part, according to technical analysis, we able to understand most of the investor think that if the gold price maybe hit the prices around, let's say 3,500, they should be thinking it's super expensive already. So that's why a lot of investors decide to sell it. And then once again, when they nearby 3,500, the gold price drop again. Because you can't predict the intrinsic value, we can only base on the market judgment. The majority of the market participant thinks their thoughts about the gold prices. Now, if you're going to move on again into the latest analysis, we're able to using the historical price and understand what is the global investor think, what gold price should be based on. So if you are going to, according to the chart, you can be noticing that when the gold hit around the resistance level 3004, 3005, investor might think it should be expensive. But of course, sometimes even the product so expensive, investor might be still continue to enter the market, because this is what we call the breakout above the record high. And then, of course, if you're going to explain in another situations, if the price is quite cheap, and then what should be your considerations of the entry point? For stock, you're able to understand, you can calculate the intrinsic value, you understand the stock prices. But what if the gold? What do you think about the global investor think? When should they enter the gold price, the gold trades? So we can be based on the technical charts, based on the support level. We're able to think until the gold price drop until which prices there should be some buyers continue to supporting it. This is what we call the support level. So you can have a big differentiations between stock trading as well as the commodities trading, forex trading, and etc. So this kind of movement mostly based on market psychology, market participant movement. That's why if we are going to have a comparison between the forex trading, the stock trading, I still think the forex trading should be have higher risk, because this is something is uncontrollable and unpredictable. We need to predict about what's the global market participants thinking. All right, so by using the technical charts, we're able to have a brief understanding about what the price should be go to based on the historical prices. And then a lot of people might be using the technical analysis to try to generate a good TP level, good support level. Later, I will let you understand how can we fully utilize the support and resistance level, and why should we use it. And then sometimes technical analysis, you need to be careful, because when there is a huge market volatilities in the markets, even you are a very, very good technical analysis trader, you might be lost, because sometimes the market movement mostly also based on the fundamental. The good example is recently we can be noticing that the overall trend, especially for the crude oil, is actually going up aggressively due to some of the fundamental reason, the rising tensions between Israel and Iran. So technical analysis is not just only indicator for us to be trades. We should be consider multiple different types of trading strategy in order for us to have a good trading experience moving forwards. All right, so by using the technical analysis, we can a classic one is we need to draw a support and resistance level based on the technical analysis. So what is the use of the support and resistance level? Is like when we are drawing the charts, this is all the line that you've seen is what we call the support level and resistance level. So let's say if you are going to remove everything, and I'm going to teach you how can you draw the support and resistance level. So if you are going to base on the charts, you can be noticing that the overall trends, the movement for the dollar is continue to be consolidated in the zone. And then after every time the dollar drop until around $98, it starts to be rebounding back, drop again, rebounding back. So at this moment, people might be thinking when the price drop until 98, it should be a very, very cheap entry prices. That's why we have what we call the support level, a level where a lot of investors think this should be a very, very good prices for them to be entering. So this should be what we call as a support level. Everyone think these prices should be the cheapest. That's why they enter and buy it again. But what if certain asset classes break below the support level? You can see that we do have a support level 98.60. Everyone think this is a cheap price that will be entered, but there will be some of the moments where the asset classes break below the support level. This is the things. This thing will be happens when people think that these prices, 98.60, the support level, are no longer the cheapest prices. So when a lot of sellers push down the prices, it will trigger some of the panic movement. So when there is some of the panic movement happens, the prices will be continue to be dropping sharply. So imagine a moment where everyone think this is a cheap prices, and then under certain moment, the cheapest prices become lower and lower. Everyone will be very, very worried about it, and that's why they should be consider cutting their losses, sell out their positions. So this is a power of the support level. And of course, when some prices such as the resistance level, let's go through the resistance level. All right, sometimes the resistance level is normally at above 1. So you can see that the candlestick, every time they hit the resistance level 100.25, it will be dropping back. They hit again, it will be dropping back. But when the moment where the resistance level successfully break above, the asset classes continue to be going up aggressively. Resistance level is a level where everyone thinks this is a very expensive prices and it's time for them to sell. Every time they reach the resistance level, they might be considered the seller should be selling it. And everyone think that this should be the best prices already lah. So, but there is some moment where when you want to sell on certain asset classes, like certain products at a high price, and you think it should be a super high price and you sell at a very, very good pricing. But until certain moment, there will be a moment where the highest price that you think break above the resistance level, 100.25, and it caused the prices become even higher than the previous highest prices. So when these things happens, of course, you might be thinking, oh, normally you think 125 is already the best prices, but what if the prices just break above 125 and maybe reach around 110? And then you might be thinking, oh, I should be selling this product more lately because it's already break above the rate. It should be breaking above the record high. It will be continue going up. The best prices should be become higher and higher. So you should be waiting for it. So of course, this thing is what we call the psychological when the products break above the record high. So you might be thinking, oh, now the highest price already break, and you think that the prices should be go higher and higher, go to the next higher prices. So when these things happens, you might be have two choices. First one, you re-enter and you buy the asset class, you buy again, or after you notice that the prices can be go so high, and then you are not you just don't want to do don't want to sell or stop the positions anymore. You just hold it and wait for the higher prices. Then you only sell on it. So the power of resistance level is sometimes what we call as a human psychological things. People think this should be the best price, the most expensive prices already, but suddenly the moment the prices become higher and higher, people might be more greedy and think they should be selling on another highest prices, or they should be also re-enter it like that. So this support and resistance level is not just purely what we call like the charting tools. It's not a very good, it's not like just a chart, just a line for us to be focused. The support level, resistance level is just a number. Actually, no. The support and resistance level is something where we can combine the global traders' thoughts. We able to understand what is the global investor think. What is a good prices for them to enter? What is a good prices for them to sell? Even you call with the bank, JP Morgan, Morgan Stanley, etc., they are not able to answer you because they are not only single player around the world, especially for the Forex commodities trading. You are going to fight with the global investor, global trader. So how are you going to communicate with each other? It's just most probably based on the support and resistance to understand whether some asset classes is expensive, some asset classes is not that expensive and cheap, and it's time for you to enter. It's a communications tool between you and a global trader. So when you just look at the support and resistance level, you can think that this is not just a pure the line. Of course, our people and be think I just draw a few lines and are able to trade in the market, but sometimes it's a communications tools. All right. And then another thing is support and resistance level. What do you think is a good time zone for you to be considered on? It depends on what time zones, what types of trader you are. If you are like you constantly working, you don't have the time to fully just keep looking at the charts every 5 minutes, every 2 minutes, then I would more recommend you to try H4 or daily candlestick pattern. You based on this daily and H4 candlestick pattern, you see for any confirmations for breakout. So you based on the longer charts, longer candlestick for you to decide your trading strategy, which is good sometimes because when you use H4 or daily, sometimes when some asset classes break above, it should be more solid because it's used 4 hours to prove these asset classes are able to break above the resistance level as compared to shorter time frame, for example, 5 minutes, 10 minutes. Just like 5 minutes is proof that these asset classes can be more expensive, but the player around it just calculate in the 5 minutes way. But if you are going to use 1 hour, 4 hour candlestick, you can be combined in this 4 hour, the trader perspective. In this 4 hour, what's the global traders thinks about some of the market movement? So, and then combine with one conclusions lah. When 4 hour candlestick have been closed, which means that the final conclusions of the asset classes prices will be formed. So shorter time frame is good sometimes if you love to play with a short-term players, and then you prefer to keep constantly look at the charts. But you need to remember 5 minutes, you only gather around a very, very small participants to do the trades compared to 1 hour to 4 hours because they should have more traders when the time zone become bigger and bigger. So it depends on what type of trading strategy you are. But if you want a stable one, prefer a more stable one, and you don't want to look at the charts 24/7, then maybe you can use a bit longer time frame. H4 or daily is one of my suggestions for you guys. But of course, if you guys feel like you prefer to look at the chart every moment, lose or winning every moment, that kind of feeling, then maybe you can try to use 1 hour or 5 minutes. All right. So yeah, we can base on these things to draw the support and resistance level. So as I mentioned, support and resistance level is it's not just a line. It's a human psychological tool. And if you don't want to draw the line, we do have another tool. It's what we call the Fibonacci retracement thing. It's formed by the guy called Fibonacci. So this thing, when you draw out, all of the support and resistance level will be just nicely formed. All right. So I give you one of the example. So imagine when you look at the asset classes such as gold. Let me show you. So if we remove all of the indicator here, and there is no more line. So you don't know what is a good support and what is a good resistance level. This is the moment where you can use the Fibonacci retracement, the tools in the trading view, or you can also use MT4, MT5. You click the Fibonacci retracement. So you click it, you just drag from the highest level into the lowest level. So you can noticing that after you drag everything, the Fibonacci will be formed. And then all of the support and resistance level will be nicely formed over here. So based on this support resistance level, you understand what is expensive price. So for example, the gold price according to a Fibonacci expansion, Fibonacci retracement, 3,418 is a very, very expensive prices. So every time the prices reach around this area, the seller might be selling it because they think this should be a very good high prices. And support level, what price do they think they should be entered? According to the Fibonacci retracement, they believe 3355 or 3356 to be specific is a very good entry prices for them to be buying it. So Fibonacci retracement can help you to automatically draw out the support and resistance level, but there is some of the criteria for you to draw. You can't simply just draw out Fibonacci retracement. It needs some criteria for you to draw on it. Okay, so now let's move on into how can we draw the Fibonacci retracement. It's actually quite simple. So you just like two ways. Either you draw from the highest level to the lowest level, or you draw from the lowest level into the highest level. But there is a criteria over there. So let's say you have a two trends lah. So let's say we are going to explain about the lower level, then you draw into the highest level. What is the criteria? So the criteria is the asset classes must be in an upward trend or a downward trend. But in terms of trend, the criteria is you need to have some of the retracement. You need to have a drop back. So for example, overall the asset classes is going up like that. Then you cannot draw the Fibonacci retracement because there is no retracement yet. That's why if overall trend is going up, you need to wait. Wait until a certain moment, there should be a dropping back, around 20% to 30% dropping back. Then it's a time for you to draw out the Fibonacci retracement, and all of the support and resistance level will be nicely formed. So let me show you one of the real example. So you can see that according to this candlestick chart, right, most of the asset classes is going up. But as I mentioned, if you want to draw the Fibonacci retracement, what things you need? You need to make sure these asset classes have been experienced of a 20 to 30% of the retracement. So when the retracement happens, these charts can be nicely drawn out. And this is another example. Overall trend is going up, but there is some retracement. Let me find if there is a very good example here. So I see at the moment, according to the 4-hour charts, one of the good suggestions to draw Fibo is Bitcoin BTC USD. So if you are going to look at the charts like that, you just focus on this area lah, this area. So you can see that in this area, most of the BTC trend is going up, but there is a retracement, more than 20 to 30% of retracement. So at the moment like this one, and then you don't know where should you put the support and resistance level, then there is a moment for you to draw the Fibo expansions level. You just click the Fibo expansions level, you click, you pull from the lowest level into the highest level. So after you pull out, you can see that the support and resistance level will be nicely formed. Of course, it won't exactly nicely formed, but of course it's like 80% of the resistance level will be shown. You can see the prices over here, the support level over here, the resistance level over here. It's quite nearby. Actually, the resistance around this one, 23.6% of the Fibonacci retracement, resistance level of 107,745. So it's a nice resistance level. So it will be nicely formed. So this is the tool where we can use the Fibonacci retracement when there is an upward trend. So upward trend, you can draw from the lowest to the highest. Of course, you need the retracement first. Then Fibonacci retracement can only nicely form. All right. So another example for the Fibonacci retracement is you draw from the highest to the lowest. So when you draw it like that, you need to make sure overall trends for the Fibo is a downward trend, but there is a moment where 20 to 30% of the retracement, like overall is going down, but you need the asset classes to be slightly rebound. So when you notice this kind of trend, then you can able to draw it nicely. So I give you one of the example. Let's see we have. All right, so I think gold should be one of the good example at the moment. Let me remove all of the small support resistance level. Okay, so you can see that the gold from here to here, overall trend is a downward trend, right? You see the overall is going down. But as I mentioned, you want to draw from the highest to the lowest as a Fibo. You need at least like 20 to 30% of the retracements. But of course, it's already retraced back, but no worries. You can still draw like that. So you draw from the highest to the lowest level. So you can notice all of the support level and resistance level will be nicely formed. So the resistance level for the gold at the moment is 3435 lah. Everyone think when the gold reach 3435, this is a very expensive prices and they should be selling it. Okay, so this is how we justify the Fibo retracement level. But of course, you also need to understand the psychological behind the support and resistance level first lah. By using support and resistance level as a trading tool, you understand what's the global investor thinking on when they reach the resistance level. Most of the investor might think this is expensive products. When they reach the support level, they might be thinking this is a cheaper products, and it's time for them to enter. And by using this support and resistance psychological trading tool, then you can try to apply with the Fibonacci retracement. By using it, all of the support and resistance level will be nicely formed based on the mathematical calculations. So yeah, this is how we draw the Fibo retracement. Remember, if you using trading tools, trading view, then just click over here. And the first one is already the Fibonacci retracement. But if you don't want, you lazy, you just LT plus F on your keyboard. In MT4, MT5, you can try to put insert Fibonacci, and then you can see Fibonacci retracement. Then you can draw over there. I think most of the trading tools, they do provide the Fibo for you guys to draw on it. So maybe if you don't believe it, you can just try first. When you think this is a very good support resistance suggestions, tools for you guys to use, then afterwards, after you like it, then you can try to implement it into your trading strategy. All right, so this is one of the example where overall trend is going down, but there's a retracement over there. So after you draw out of the Fibonacci resistance support level will be nicely formed. And this is another example. And noted that it's very important. Fibonacci retracement can only use during reversal and not instruments that have achieved new high or new low. So one of the example is like, imagine we don't look around here. From here to here, we skip it. We understand that the gold prices recently continue going up, going up, going up until this moment, then it stopped. Imagine these charts, you don't look at it first. So when the asset classes hitting the record high, if you still use the Fibonacci retracement to draw, you're no longer able to find the next resistance level. We will be empty already. So we are using another tool, which what we call the Fibonacci extensions or Fibonacci expansions in the MT4 MT5 system, where after you draw this, if you are using this tool, you can be easily find the asset classes where the next resistance level is should lies on. As I mentioned, the gold price already break above the record high. We no longer able to find what is the next resistance based on the historical prices. So when this thing happens, you can use the Fibonacci expansions too. So when you draw out the Fibonacci expansions, all of the resistance level will be nicely formed. So based on this one, you notice that 3450 is a strong resistance level. If they break above again, then next resistance level is 3540. People might be thinking gold is expensive when the prices reach 3540 according to the Fibo expansions too. So when this thing happen, asset classes almost breaking above the record high, then you're no longer able to use the Fibonacci retracement. And then you will be also not able to draw the resistance level. So what you need to do is you can try to draw with the Fibo expansions. All right. So this is a tool indicating, let you guys have a brief understanding about how we use the Fibo retracement, Fibo expansions, and then we also try to combine with the psychological of the support and resistance level. So remember, this is very important. As there is support and resistance level, you need to remember in terms of like in future, if you are learning on it, just don't think this is just a pure line. This is what we call the communications between the world traders. So when you apply this kind of psychological insight for you to learn things, you should be learn faster and you understand what's the market structure are in, what's the global trader thinking on it, just based on the line. So you can learn from there and don't just think this technical analysis is just like line and etc. It's actually no. All right. And then now let's move on into simple one, candlestick pattern. Candlestick pattern is very, very easy for us to learn. It's just the pattern. You just need to memorize a candlestick. So when every time this pattern have been forming, then there will be a chances for a trend reversal. So one of the example is you can see hammer. Hammer is just like a hammer. You do have a hammer and hanging man. Hammer is just at the bottom, hanging man is above. So when you notice this kind of candlestick, the body is very short, but the shadow is very long. When this thing happens, which means that a lot of investors trying to push the prices dropping, but they fail. End up after 4 hours, if this is a 4-hour chart, their body open at above prices. So when this thing happens, there should be a chances for the trend reversal moment. Let me see, do we have any good example to show according to the charts. Or you guys have any interested products that you want to know? And I can also share with you. So I found a good example in the BTC USD over here lah. So you can see that the overall trends for BTC, they drop back, retracement back. Then at the moment when the hammer candlestick have been formed, a shadow very long shadow, a body is very short. Then the BTC starting to be rebounding back. And then the second time is around here. So they form again when they nearby the support level, then BTC rebounding back. So this kind of trend reversal candlestick is like you need to combine with the support and resistance level. Yeah. So you can see according to the chart here, these prices and these prices, these two, is what we call the support and resistance level. So they're testing that drop, rebound around this zone. So this candlestick pattern, if you want to identify for any trend reversal, it's better for you to combine with this candlestick is on the support level or the resistance level. Then you only enter to trade. So imagine if the hammer candlestick form in between here, in between. So if they form in between, not recommended for you to think this is the time for them to drop. No, but if this candlestick form around the resistance level, then maybe it's a time for you to decide, oh, this should be a trend reversal things that is going to happen. All right, so it's better for us to combine with a support and resistance level instead of like you just notice this candlestick, oh, then you just enter. Another good example is here lah. So we combine with the support level, they testing, they break, they rebound, and then once again, the hammer have been formed. See, with the combination of the strong support level and then the trend reversal things that happens, then BTC rebounding back. So this is a good way for you to combine everything instead of like when the moment here they form a hammer, then this shouldn't be a good point lah, unless it's nearby support and resistance level. All right, so remember it's not just a hammer. You must be combined with the support and resistance level. All of the potential trend reversal candlestick pattern, you need to combine with the support and resistance level. And the best situation is you can also try to combine with the indicator. So MACD indicator, RSI indicator, you can combine with the divergence. But indicator parts we will be discussed in our future webinar series. So stay tuned on it. All right, so it's better for us to combine everything. And then when hammer is formed, then the asset classes is likely to be rebounding back. Another new thing that you learn is bullish engulfing or bearish engulfing. This is something that really simple for us to know. So bullish, let's explain about the bullish engulfing candlestick. So normally we identify two candlestick patterns. So bullish candlestick pattern is where the buy positions, the buy signal of the candlestick is bigger than the sell. So when this thing happens, which means that the momentum for the asset classes to be rebound is huge because the buying momentum, the bullish momentum, the buying power is strong. So it's time for it to have a chances for it to trend reversal. So as if you're going to look at the example, we will have a lot of bullish or bearish engulfing pattern candlestick for you to be considered. And of course, as I mentioned, it's better for us to combine with the support and resistance level. So of course, I will also find you sometimes there is a good example and there will be a bad example also. So let me see where any good example on it. So let's see. You can see that the gold price here is a classic nice bearish engulfing candlestick pattern. So when the gold price near around the resistance level, the Fibo expansion resistance level, they struggle going up, and then the buying candlestick, which is the green color candlestick, is small, but the red color, which is a sell candlestick, is huge. So when the moments happens, gold price is going to retrace. So bullish and bearish engulfing, you can base on it to decide the possibility of the trend reversal lah. So another example is around here lor. So when we compare these two candlesticks, you can see that the green candlestick is much bigger than this small candlestick. So when this thing happens, trend reversal will be happen. The asset classes will be going up. You will look at tons of the example around this one. Just look around the support level and see whether the trend reversal candlestick will be forming. All right, so this is a classic bullish engulfing and bearish engulfing. And this is an example. Red color is the selling one. Everything is dropping, but once the trend reversal things happens, when the bullish candlestick bigger than the bearish candlestick, then asset classes, it's time for them to be rebounding back. And then the next thing that we are going to cover is the morning star and evening star. The name, you don't have to remember. It's better for us to just remember of the pattern. Of course, if you want to have a very professional, then you can say, you can see this BTC already form what we call the evening star, so it's time for it to be dropping and etc. But normally traders won't just give that kind of professional words. You just remember, oh, when morning or evening star have been formed, this image have been formed, then maybe it's time for it to have a trend reversal. So it's a simple candlestick, it's just a star, a very small body, a very small shadow. So this is also another potential trend reversal pattern. So one of the example is around here. So more evening star happens, it's dropping back. So as I mentioned, it's good for you to combine with all of the support and resistance level. So maybe here is another example of the evening star. Body is small, shadow is long, then it's time for it to be rebounding back. So this is how we identify the potential trend reversal. But of course, not only support and resistance level you need to combine with lah. It's also the best scenario where you can also combine with the fundamental storyline. Because no matter how good is your technical analysis, when fundamental things is going to happen, the economic data is going to release, there is a war happening or etc., then the market movement will just don't care about the technical analysis. So careful on it, don't fully utilize. Please have a good risk management in your trading journey. All right, you don't think that, oh, morning star already formed, then you full margin to do some of the trade. Highly not recommended for you to do it, because no matter how good is the charts, sometimes storyline will be changing everything. So if you never experienced it before, then congratulations on you. But my advice is need to have a good risk management, especially you are trading with all of these high risk uncontrollable asset classes, especially like forex movement, commodities movement. Sometimes it's based on the market news, and market news you can't predict it. For example, suddenly Donald Trump give a speech regarding on some things, then there will be a huge volatilities in the market. So remember, even we teach you about all of the potential trend reversal candlestick, but you just don't over trade over it. You can testing, but just don't full margin to try on it. All right, then of course we do have another pattern, but this pattern recently not easy to find. But if you notice it, that it's a good chance for you to focus on. It's what we call the left head and shoulder signal lah. When head and shoulder is formed, and then the asset classes break below the support level, then sometimes it will be dropping. And we also do have inverse head and shoulder. A body very short, and the hand very short, the shoulder very short, and then the body is very high, and the right shoulder is very short. And that is a simple hand shoulder signal. And then we noticed one trend on the hand and shoulder, even though it's not nice, but it should be one of the example that I can be showing you. So here is a clear, of course not 100% clear lah, but you can be noticing from it. This is a shoulder, very short, and a head, very long, and then a shoulder again, which is a very short. Then once the candlestick break out above the shoulder, then it will be follow the trend on it. So this is the inverse one. Of course, if this is the, like for example, like this one, not inverse one. So of course they break below, then it should be dropping lah. Inverse one is another situation. You can see that. So head and shoulder have been formed, break out, then the asset classes will follow on it. All right, so head and shoulder is also another good common price pattern that you can be considered on it. And then we also do have the double top. Double top is also simple. The best situation I've been found in the chart is the EUR/USD. If you look at the recent trend, the EUR/USD is actually forming the double top. But the best situation is EUR/USD break below this double top support level, then the chances for it to drop should be higher lor. So, but of course, if obvious is still to break out and then starting to be rebounding back. But if a good example should be when the double top is formed, then you wait for the potential breakout. Once the asset classes successfully break below the double top, then the chances for it to continue its trend should be higher. All right, So it's a simple double top hand and shoulder, but a best combination is if you notice when there is a bottom over here or the top over here, have a very good trend reversal candlestick. Hammer candlestick, bullish engulfing, bearish engulfing candlestick, and evening star, morning star, and etc. So when this thing happens, especially when the double top has been formed, then it's time for you to consider it. Maybe the asset classes already might be experiencing some of the trend reversal. So it's all combinations with the candlestick, support and resistance level, candlestick pattern, and the pricing structure. So remember it. And then this is another situation where there is a triangle pattern. When they break over the triangle pattern, then the charts will be continued. All right. So I think this is all the most important trade, not most important. So this is one of the important trading indicator, trading tools that you can be learned. And it's quite suitable for new trader. I'm not sure whether how experienced you guys are, but maybe some of you guys are new traders around here. And we hope that this trading strategy, the quite simple one, can able to help you build some of the trading basic. And if you are interested moving forward, of course, we are going to do another level of the webinar, which is like a value gap, etc., liquidity zone, and that kind of webinar that we are going to provide to you guys. But of course, no matter how complicated you look at the indicator, technical indicator, you need to understand just one thing, which I keep repeating one, is like the candlestick pattern, the technical analysis, all of the charting, support resistance level, it's not just a number. It's just one way of communication with each other. So if you use a basic tool, which means that you use a basic conversation with each other, like it can be usable. But of course, it's not 100% correct. Like it can be usable. So, but if you want to make a communications between the trader become more complicated by putting a lot of different indicators inside, it's also usable. But it depends on whether the current situations, most of the market participants are using which kind of trading strategy. Are they using the basic one or are they using the complicated one? So the every time zone, the pattern will be different. The candlestick movement will be completely different. As I mentioned, one trading strategy not able for you to fulfill like full-time traders, long-time trading journey. Even if you are earning some of the money by just 1 to 2 weeks, there will be sometimes the next month, the market structure will be completely changes. So when that things happens, you cannot use back the same trading strategy and you trade on it. So because the communications between traders and traders have been already different, they're speaking another language already. So if you use back the previous one, it's not workable. So good trader should be constantly looking on it, adjust for their trading strategy, in my advice. Don't just use 1 to 2 trading strategy for your full-time, the whole life lah. So of course, if you are using few strategy and you are earning money for a few weeks, and afterwards, after 1 month, you start losing your money already, then you just don't imagine that, oh, previously this strategy should work and forever that strategy should be working one. No. So then by that moment, it's a time for you to reconsider another one and new and learning the new market patterns. All right. So, and if you guys have any interest on the market updates, you can also follow us on Telegram. You can screen the QR codes over here. And in this Telegram, we are trying to update some, not only technical analysis, we also update some of the market storyline. And then, of course, we will be also having the website. Inside the website, we will be also updates all of the different asset classes tools. And you can be applicable and learn. As I mentioned, trading is not just based on a few tools. That's why in our website, we have been also updating you guys about the storyline in the markets. And then example, this crude oil. So we update about the storyline, what's going on for the crude oil recently, and then the charts on it. Based on the technical fronts, what is the support and resistance level for the crude oil? And if you guys don't love the storyline, then we also do provide the charts for you guys. The charts that we believe this is a good suggestions that we will include inside, and this will most probably explain about the technical analysis. So if you are interested, you can also visit our website to learn more things. All right. So now I'm going to open for Q&A session to see anything that you guys want to ask me. Actually, Bernardus mentions how to get confirmation entry. All right. So how to get confirmation entry is you need to wait. Sometimes when one asset classes break below the support level or the resistance level, it doesn't mean for you to must be enter right now. As I mentioned, you can be consider using a different time zone candlestick to identify whether the breakout is already successful or not. The longer time frame candlestick should give you a more confidence on it. The shorter time frame should give you a lesser, but of course sometimes it will be different. One of the example is like BTC USD over here. Recently, BTC USD continue to consolidate in the zone. And then once they break out, you don't enter first. The best confirmation is like after they break out, they retrace and retest over the zone around here. They retest back over the previous resistance level. Then you can either enter and then your stop loss just put below the previous resistance level, which is the support level right now. But once you set it, then you will have a very good risk reward ratio. You know where should you put your stop loss, where should you put your enter. Then even it's a fake breakout or not, then you have a confidence. Compared to you just wait, just break out and you enter. Sometimes it's good because you are not going to miss out the opportunity. But the bad thing is you're not sure where should you consider your stop loss, whether here or here, you don't know. So bad situation is like they break out, they retrace, they will dropping back one, and then you make sure this is after they drop back around the previous resistance level, then it's already successfully forming the support loss. So the support can just put below it as a stop loss, and then you can let your profit run. This is the suggestions for you guys. So all breakout, you don't just rush to be enter in the market. So I hope I answer your questions for Bernardus. Any more questions that you guys want to ask me in the chat? All right, if not, then I think we are going to end our sessions here. And thank you so much for your time and see you again next time. And we really hope that you learned something today. And yeah, thank you everyone. Have a good day.